Hey everyone, let's dive into what's been moving the markets. First up, today's top performers in the currency markets are the Japanese yen, Swiss franc, and euro. On the flip side, the US dollar is currently bringing up the rear. Crude oil felt a squeeze this week. We saw prices soften as a robust US dollar made oil more expensive for international buyers, and some positive shifts in geopolitical stability eased supply concerns. Speaking of US indices, Thursday saw a dip across the board for the Nasdaq and S&P 500, but fast forward to Friday and we're seeing a more bullish mood with indices trading slightly higher and even gapping up at the open. Treasury yields in the US have been on an upward march. A mixed bond auction contributed to this rise, creating some headwinds for fixed income investments. Gold glittered a little less brightly this week, shedding 2.8%. A combination of investors taking profits and the dollar's earlier rally put downward pressure on the precious metal. Interestingly, gold managed to eke out a small gain on Friday, even as other metals continued their descent. The Federal Reserve minutes dropped, revealing a split among officials regarding the timing of future interest rate cuts. While there's a clear divergence of opinions, the general consensus still points towards some easing happening later in the year. Now for equities, a word of caution from some big players. Both the IMF and several major banks are sounding the alarm, warning against overconfidence in the stock market. The AI-driven earnings story is still powering tech giants and keeping indices like the Nasdaq and S&P 500 afloat. However, many experts are flagging this as a growing concentration risk. The US dollar had an interesting week. It initially flexed its muscles, attracting safe haven flows amidst whispers of a potential government shutdown. However, that strength wavered by Friday, possibly due to news of a new Argentine peso currency swap, causing the greenback to retreat a bit. However, the dollar's recent slide has provided some much-needed support for the Japanese yen today. To wrap things up, across the Pacific, Japan is watching its political landscape shift. Sanaka Takaichi is now emerging as the likely next prime minister, and her anticipated dovish stance on fiscal and monetary policy initially put pressure on the yen. Stay tuned for more updates.